This is another video, live video, I should say. It's an example that I found with trend green down touching pink. These are fairly easy to find. You just set your scan and do it and create the scan so that it goes off an hour before the closing bell. This one here is the market hasn't opened yet, and this one also has a right leg W in a 4-day pattern, if you see here. Today, this is SPNC, and you can see from the data window over on the right that this is June 27th, 2017, and it looks like we're going to have a gap up. And one of the reasons I'm doing this one is because trend green down touching pink is great. Trend red down touching the zero line is great. Trend gray is also in the category of down touching pink. And we have a 4-day right leg W higher pattern there's 1, 2, 3 in the trend chart. There's a couple in the swing chart. There's several in the zip chart. And there's, of course, 3 in, here's a little, I didn't see this before. Trend red is a right leg W higher, and trend green is a right leg W lower. That's going to be pretty significant. This here is great, but the divergence in the price lines is even better. One is a lower right leg W 4-day pattern. One is a higher right leg W 4-day pattern. With all of those right leg W activities, we may get a decent gap up. Especially, we've got really good supporting conditions. Trend trio is above zero. Power orange and green are above zero. And swing, I forgot to look. Yeah, there, swing red and green are both above zero. So all your short-term trend lines are telling you this should be a good gap up. It's basically a large pattern, a 4-day pattern. It looks like it should be a nice gap up today. It's SPNC, and this is June 27th, 2017. And again, this is a live video. I do these videos ahead of time just to point out stuff that I don't know is going to occur as of yet. But when you have just a lot of supporting evidence like we do here in multiple right leg W higher patterns, and then that divergence in the price chart between red and green with one higher and one lower, that's pretty significant. That's going to be the same with a down with gaps down in a high M pattern where red is high on the first peak and lower on the second peak, and vice versa for green. So green ends up higher on the high M peak, on the right peak of the high M pattern, and those can be higher right peaks or lower right peaks as well. I hope that wasn't confusing, but the distinction is divergence. When you have divergence, especially in the price lines, that's really good. So we'll see what happens after this, and we'll talk about it later.